And we will get started. Man, what a last couple of days it's been. So I won't spend too much time on this because I know we want to get into the markets. But this weekend, my son got really sick with like a stomach bug thing. He woke up in the middle of the night, was just vomiting and was not good. Um, so then he kind of struggled with it. And then dad got it yesterday. Actually early in the morning at like 3 a.m. and it wrecked me. It was I haven't had like it wasn't like a congestion cough kind of thing. It was just like all stomach. Hey Joseph. And I literally was just stuck in bed all day yesterday. And I hate sitting around, and this is like two times in the last 2 months where I've been sidelined by an illness, but I'm feeling a million times better today. I'm back. I'm glad to be back here with you guys, and I hope that you don't catch the bug because it hit my youngest son. He got it. He's better now. Hit my wife. Didn't really impact her as much as me because she says she's tougher. She is, and then my daughter. So it kind of worked its way through the whole family, and here we are. So hopefully, you guys are staying healthy out there. But tonight, we're going to talk a little bit about price to earnings ratio and earnings per share, and really spend some time talking about fundamentals. It's not something that I've really ever gone over in class before or in any class. Um, and it is something helpful to consider when you're weighing whether or not you want to buy stock for the long term or even for a swing trade. If you're planning on holding something 6, 8, 12 months, even 2 years, because this helps you gauge how strong a company is in terms of investors, how they perceive the company, how they look at it. And so we'll look at that earnings per share and price to earnings ratio. And it's a pretty simple calculation, but I wanted to go over that with you guys tonight just to give you a different perspective into the market. And I'm probably going to do a little bit more of this as well. And this is tied to what is called in the markets fundamental analysis versus technical analysis. So you guys are very well schooled on technical analysis, the charts, moving averages, candlesticks, all those things. Fundamental analysis is looking at the companies themselves and assessing the company themselves and their performance. So we'll take a little bit of a look at that tonight. And then the second half we'll reserve for taking a look at the charts, a little broader market update, and any tickers that you'd like me to look at. And I want to try to preserve more time for that tonight because I was a little long-winded last week in talking about market cycles. So I'm going to go ahead and jump in and go over this with you guys. Give me 1 second to pull this up. 1 second. Let me share it. All right, here we go. Present. All right. Um, so no, today's the 12th. Oh my gosh. I'm lost this week. So we've got two more planned here in November. We've got two in December, one more date to be added, just a heads up. And then two, I hope all of you are joining me tomorrow for the first night of trading psychology. I'm looking forward to that. You get to see my ugly mug 2 days in a row, but that's going to be a lot of fun. I will be sending out the registration link for that tomorrow. But I hope you will all join me for that. So we talked about market cycles last week. This week, we are going to talk about earnings per share and price to earnings ratio. And when you go to TradingView, and I'll actually show you where to find this box real fast, but I'm sure you guys have seen this before. But if you go to TradingView, let me pull up TradingView, and if you look down in the lower right-hand corner right here, And if you scroll down, you could see key stats for all the companies. It has their next earnings report listed. It has volume, average volume, market cap, dividend yield, price to earnings ratio, which we're going to talk about tonight, basic EPS, shares float, and beta, right? And so that's what I wanted to start tonight's review, or not review, discussion of PE, earnings per share, is by showing you where that's located in TradingView, because you can pull this up for any company. And this is helpful because it will help give you an idea of just specific information related to that particular company. For instance, here we're looking at NVIDIA's numbers. Okay. We could see things here. What is their market cap? Well, right now, the last time they updated this, 4.67 trillion. So market cap means how much is this business worth in total? So 4.67 trillion, which is just insane. It'll tell you the dividend yield. It's 0.02%, which is very, very small. NVIDIA doesn't pay a very big dividend at this point. And then it gives you these numbers: price to earnings ratio, which we're going to get into, basic earnings per share. And I'm sure you're probably asking, what does TTM mean, right? TTM. And we'll talk about that. Shares float is just the number of shares that are available to be traded of a particular company. In this case, for NVIDIA, there's 23.31 billion. And then beta refers to how the stock moves with the S&P 500. So you can get all that information on any company on TradingView, bottom right-hand corner. Okay. You might be asking yourself, well, Jeremy, why is this important? Well, we want to know when we talk about earnings, why earnings are so important is because we want to know what types of profit companies are generating. And that typically is shared with us, shared to stakeholders through their EPS, or what is known as earnings per share. Okay. And you can find that in that box that I just pulled up. Okay. That is the foundation of valuation for any company, what their EPS is. And if we just go back to NVIDIA's EPS, you just go back here, we can see their basic EPS is $3.54 per share. Okay. And you could see how many billions of shares they have, right? So $3. So for every share that they have, they generate $3.54 of revenue, right? So keep that in mind. The formula, so this is how they calculate earnings per share, is they take their net income, all right? Net income, they minus the dividends, and then they divide that by the average number of shares that are outstanding. And I'll show you the calculation here in a second. But this number that we get tells us a lot about the company. And for NVIDIA, there's no secret that their earnings are always stellar. They're the best, most profitable company in the world. And earnings per share tells us how much profit a company makes for every share that is out there in existence in the world. All right. And that TTM that I was talking about, we can we should be looking at that. And what that means is the trailing 12 months number. So it's the last 12 months of the performance. So the EPS that is trailing 12 months, that gives us over the last 12 months, what is the real performance for the company in terms of earnings per share. And what we want to see when we look at that number, when we compare it, okay, NVIDIA is going to report next Wednesday. So that's I think the 18th. 1 year prior, what is the year over year growth from what NVIDIA reported last November to this year? And typically, you'll see in those reports or in the summaries that come after that, or when the CEOs are doing their earnings calls, they'll say, we grew X% year over year in terms of our earnings per share. And what we want to see is not only consistent growth, but how much did they beat the previous year's earnings per share, right? And how we can benchmark it, there are some numbers that we can look at when we're talking about mega cap tech. So that's the Mag 9, your Netflix, your Metas, Nvidia in this case. What you're looking for in order for it to be a strong year over year EPS is 10 to 20%. So anything that falls in that range is solid. Now, if you want to have a really rocket ship type move off of earnings, then you're going to have to be outside of that 10 to 20%. All right. So your mega cap stocks fall into that category, 10 to 20%. Your mature industries, these are companies like Procter and Gamble, companies that have been around for a long time. They call these your mature industries, and they're not big movers like big tech. For those types of companies, you want to see 5 to 10% growth year over year when we're looking at EPS from the current earnings report compared to 1 year prior. And then when you get into your high growth stocks, you're talking, companies that are really judged on their growth or they're really up and coming. Your Palantirs, Tesla would fall into this as well. They're judged on a higher bar, 20 to 30% they want to see. So what we want to do is just get in the habit, and you could practice this whenever you go to TradingView. Start looking in that bottom right hand corner in the companies that you want to own long term, or potentially maybe even for a swing trade. Hey, am I swing trading a company that is solid in terms of its earnings? Meaning, if I get into the swing trade, is the probability good that it's not just going to dump right away? And you'll know from the charts and the technicals, but this can also just give you some more information and insight to maybe even help you create a role to say, hey, I'm only swing trading companies that have strong earnings per share and that their growth every year, year over year, and their EPS is strong. So it's just another way of really defining and selecting really great stocks that you trade, right? We know blue chip mega cap stocks are great to own and to trade, but this is another way for you to evaluate on your own when you're on TradingView. Okay. So that is earnings per share. EPS, that's what it stands for. Net income minus preferred dividends divided by the total number of shares. Now let's break this down into a calculation. Let's use NVIDIA. So here's the numbers from 2024. The net income, 26.24 billion. All right. And we can see the outstanding shares that were in circulation, and that gives us an EPS of 354. All right. So of those 7.4 billion shares, $3.54 was earned per those shares, okay, over the past 12 months. And their earnings per share, again, we're looking at the trailing 12 months for 2024 was 100%, right? Which is just insane. But it's NVIDIA. Um, and when the EPS doubles, but price rises faster, the PE expands. And PE is what is known as the price to earnings ratio, which we're going to look at here in a second. And they also call that price to earnings ratio the M, which stands for multiple. All right. And like I said, we're going to look at that. And so what we want to take away from this is that earnings per share is super important. You can almost look at it as the engine. And what we get from that number, the EPS, is the multiple. And that shows us what the valuation of the company is, which we're going to look at here in a second. And so when the EPS is growing year over year, and the market believes that it's going to continue to grow year over year, like we've seen with NVIDIA, or as you're studying and researching companies that you want to hold and own long term, if you can find companies that are going to continue to grow their EPS, those are good companies that you want to invest in because there's a greater likelihood that their value and their price of their stock is going to increase over time. All right. So let's get to the second part of this. This is price to earnings. This is what is known as the multiple. And when we talk about price to earnings, or you'll hear PE ratio, right? We can go back and see this should be on, let me see. Yeah, price to earnings ratio right here, 56.65 for NVIDIA. So we want to look at this number as well. So price to earnings ratio or the multiple, this number tells us what investors are willing to pay for $1 of a company's earnings. All right. So price to earnings ratio or the multiple tells us what investors are willing to pay for $1 of a company's earnings. And the way that we come up with that number is we take the price, which is what's the stock trading at. So I pulled the price of NVIDIA today and plugged it in here. We take that price, 192.34. We divide it by the earnings per share, which is that 354. And when we divide it, we then get the PE ratio or the M, the multiple, which in this case, for NVIDIA, it's 54. Okay. So people are willing to pay 54 times more than their earnings per share to own NVIDIA. All right. So just think about that for a second. That seems pretty crazy, right? But what that M tells us, what that price to earnings ratio tells us, when that number is higher, that says that investors see significant growth potential and growth power in a company when that PE ratio is higher. So we can interpret this using this little table here below. All right. So we're going to start from the high end, right? So if it's greater than 40 times, these are hyper growth companies with insane expectations. Again, it's NVIDIA. We all know the expectations for NVIDIA. If they miss, they never miss on earnings report, but if they're slightly off on one number, they get punished because perfection is expected from them. It's just the target is set so high. So anything that is above 40, which NVIDIA is, investors expect hyper growth, and there are super high expectations for those companies. And companies can stay here in this area, but only for so long and only if they can maintain that level of growth. And here's the thing, for as great as a company as NVIDIA is, it's not going it and I'm not saying it's coming to an end anytime soon, but to continue to grow and 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 grow, you get the point. It just can't go on forever. Eventually, the company will mature, right? Like we talked about market cycles last week, it will mature. You'll have that distribution phase and it will repeat. So if we can find those companies that have that PE ratio where there's hyper growth, super high expectations, they can be very, very rewarding because investors are expecting more from them down the road, but they're also proving it at this point in time. All right. Sometimes, however, if you have a high multiple, a high PE ratio, some people will say that the stock is overpriced or that it's overvalued. And you can see, with Palantir. you're hearing that said right now. They have a high multiple, but what investors see is long term, this company has huge, massive growth potential. There's high expectations, so that's why that number is up. And we could just look at some other numbers here. If the multiple is between 25 and 40 times earnings, it's a growth premium. So investors are pricing in future expansion. So it's really, really good, but it's not NVIDIA good, right? It's still darn good. Fair value, this would put something in line with the S&P, which trades 21 times um, the earnings of all the companies in the S&P 500. So fair values 15 to 25 times um, in regards of the multiple, and then undervalued less than 15. And if you see a company with a multiple of 15 or less, the market doubts there's growth potential for that company. Okay. So when you're looking at EPS, the lower that number, the market doesn't see, investors don't see a lot of growth from that company. They're not pricing it in. So when you look at that, if you start looking at that box in the little right-hand corner, take a look at um, PE ratio and see what that number is. And if it's a really low number, you could see, all right, well, there's not a lot of growth expected here, right? There's not a lot of growth potential. If you're seeing it 15, between 15 and 25, you know, all right, well, hey, this is lined up with what the S&P 500 is. And then anytime you get over that 25 or higher, 25 to 40, there's a growth premium. Above 40, it's massive. Okay. So these are just some simple things that you can do to begin looking at fundamentals of the company. And then you could pair that with what you do from a technical perspective. And there are so many more things that you can look at when it comes to the fundamentals and what we're going to do next week. And I think it'll be perfect timing because NVIDIA earnings is Wednesday, is we're going to take a look at an earnings report and dig into some more numbers. But I just want to go through with you guys, what is included in those reports. We'll look at the reaction that comes off of those earnings. It's obviously going to be a big one because it's NVIDIA. We know that it moves the markets. But I wanted to give you sort of an introduction here tonight on just two basic things you can begin looking at, that earnings per share and the price to earnings, which is also known as the multiple. So that now, when we go look at, let me close this out. When we go look at the charts, and we can pull up here, where is Palantir? Palantir, Palantir. There you are. All right, here's Palantir. Um, so here we go. Price to earnings ratio right here. Four, 452.78. That doesn't even seem right. That doesn't even seem right. That seems off. I know, I know that, it's been attacked a lot here recently. Michael Burry being one of them of Scion Capital, who's famous for the Big Short. He's got a huge short position on Palantir, but that's one of the reasons why is because he's saying that the multiple is just stratospheric, and that's pretty darn big. Let me just confirm that's accurate because that just seems exorbitant. It would make a lot of sense there. Give me 1 second. Uh, Let me see here. I'm just checking that because that seems Yeah, it is. That's crazy. That's crazy. But again, it's just how another way you can gauge the growth of that company. Or if let's go to MU, we could see here basic EPS. So they make $7.65 of earnings per share. Okay. All right. And then their price to earnings ratio is 33. All right. So they're in that growth range. They're not in Palantir range, but they're in that growth range. Let's go look at another one. Let's look at Tesla. Where's Tessie? Tesla's been quiet. I have a feeling they're getting ready for a big move here. All right, so Tesla, here we go. Basic earnings per share, $1.64 of earnings for every share existing. But look at their multiple. Look at their price to earnings multiple, 297.49. So you could see that people value the future of this stock, not necessarily the present moment, but what is factored into this when people are paying for the stock today is what is going to be delivered in the future. Optimus, autonomous driving. That's what that price to earnings ratio gives you. All right, let's look at another one. Let's see what Coinbase is. All right, so their earnings per share, $12.64 per $1 of earnings, uh, or per one share, I'm sorry. And their PE ratio, 27.52. So not a super huge growth stock. Let's look at one more. How about CoreWeave? Because this one just got pummeled on earnings. So their EPS, they're not even profitable, right? They don't even have a a multiple. Let me do one more, and then we'll get into the charts here. Let's take a look at. Let's do Meta because they've been getting pummeled here. Meta, earnings per share 23 or no. Yeah, $23.18. And their price to earnings ratio 27.9. So their multiple is kind of on the low end, but they've been getting beat up here recently. But I wanted to share that with you guys tonight. Hopefully you found that interesting, beneficial. And let's get into the charts and take a look at whatever you guys want to look at. You put the ticker in, I'll take a look at it. All right, sound how. Let's get a clean chart. Second here. Move this over. Hold on, guys. All right, somehow. At least I sent you guys the right, or I didn't send you an expired link this time. All right, so here's SoundHound on the daily, and let me add the VRVP on here real fast. VRVP, and then I'm just gonna throw these EMAs on here for now. Um, so right now, before I talk about SoundHound, what I would say is that this even this rebound that we've been having, it's all mega cap dominated, and we're not seeing the small caps or the mid caps really start to pick up. They've actually cooled off quite a bit since probably right around this candle, since the middle of October. We saw that there was a nice push, nice rally in small caps, mid caps. But since then, you've really seen across the board a lot of those companies start to give a bit back. And SoundHound falls into that category. Even if you go to a HIMS, a lot of these charts are going to look the same, right? Or this is probably the 16th, all right, in that area, the 15th into the 16th. And so until we start to get some inflows back into these companies, it's probably going to be more choppiness. maybe building out a little bit of support, and SoundHound falls into that category. I think that they had a pretty decent earnings report, if I'm not mistaken, when they reported last week. But it wasn't enough to really sustain any type of a move. And I think earnings was here. They they moved lower. So you had a nice indecision candle there. You had a little bit of a move higher, couldn't hold on to it, and then it sold down. Now we did have market weakness that came in last week. Um, so we'll have to see if this thing can get a bounce. In terms of our longer term moving averages, let me just throw the 100 and the 200 on here real fast. 100, and I'll make this a little bit thicker. 100 and the 200. I change this color on this one. In terms of the 100 and 200, we're below the 100 for the first time in probably quite some time on SoundHound. Yeah, it hasn't been below the 100. You'd have to go back to, let's see here. When was this? June of this year. And then it did start a little bit of a push out of there. Um, so maybe it's in a range that it wants to bounce. You do have the point of control and this thicker volume node down here. But again, we're going to need to see things pick up for smaller caps. I think there is some fear out there that the Fed is not dead set on a rate cut in December, and in fact, a lot of this Fed speak this week has been a little hawkish, to where a lot of the Fed members are saying that they're okay with holding tight with rates in December, which is not what investors want to hear. So I think that could be a reason why you're seeing some pressures to the downside on small caps. So doesn't mean this thing is going to stay down here forever, because you could see here, if we just come back here to, what was this, Thursday? Now this was a move off of earnings, obviously, so it did get some steam there, but this thing could move pretty quickly. And it can rebound pretty quickly as well, because it got up here to 17, dropped back down, and then in a matter of looks like 3 weeks, it got back up to $19.25. So this one can move rather fast. It is interesting that we're retesting this little area of support here where it bounced after this drop, and then also what was resistance back here as potentially a new support. And this was in July. So it's a nice, interesting area where it is now. And if you go back to last December on SoundHound, it had a ripper of a move, right? If we see here, this was, here's December here. So it was at $9. Uh, $9 on November 29th. And you could see that it went all the way to 25. So this thing could rip. It's not going to take a lot of time, and history has shown it could do that. So the price is actually lower than it was last year. So you could absolutely see this one rip. And in fact, I think if they start cooling down big tech a little bit more, which could happen, and I keep talking about rotation, maybe you could see the money flowing to SoundHound a bit. That's a long time I talked about SoundHound. Roblox. I love me some Roblox. Where's it at here? Here we go. All right, so here's Roblox. So in full transparency, I own 2028 Leaps on Roblox. They are currently down, but they're 2028 Leaps. I'm in no rush to get out of the position. But this is a pretty interesting chart, because we hit this all-time high back here, was this July 31st. And since that point, it has tried to push back up to those all-time highs, but it just couldn't. And if you go over here into, let me actually go to I got to change this to extended trading hours. if you come over here to their most recent earnings report, you could see that it did get up to 152, which I think it did take out. So it did take out the all-time high, but it happened pre-market, so it doesn't count. So it did hit 152, but then you could see what happened. They just smashed it down. Okay. And really, since then, it's just been dripping lower and it's finally found some support where it's been chopping here as of late. And remember, when you get those big moves down off of earnings, or if there is some type of negative catalyst, you rarely will see the stock immediately rebound and move higher. It rarely happens. And typically what's got to happen is you got to build out a base. You got to get the sellers have to capitulate and get tired. And it's got to establish some new support, which I'm not sure it's done that yet. We did get some positive news that came into the stock on Friday, where they're going to be making the game Grow a Garden into a movie, which is going to be a marketing boon for this company because it's going to pull in lots of viewers, a lot of people into the platform. And they're also expanding into China, which is something else that is going to be a positive for a stock. And then you're also seeing a lot of financial institutions who are increasing their price targets. I think it was either Goldman Sachs or Morgan Stanley. They didn't up the price, but they reiterated their 170 price target on this company. And so there's opportunity here for Roblox. Now, if we're looking at this just from a technical perspective, if we just measure this out from all-time high to this low, that's 33%. So it's in its own mini bear. Um, at some nice support here on the VRVP, and it's found some buyers here off that 200 EMA. And so what I'm looking at is you guys can see we're getting a little bit of a bottom here. So let's see if we come back down and test that 200 again, or if we want to come down and actually test the 200 SMA and then get a bounce out of there. Because that would be a good psychological level where you would think buyers would step back in. And if you look at the last time that Roblox had a big move higher like this, similar kind of a pattern, uh, popped in February, gap down, and then just bled lower to where it finally found support on the 200 and then started this massive move. And this drop here was about 34%. A drop from here to the 200 would be about 36%. So maybe we're going to get another one of these and then this. So this and then this. It's worth watching. Again, there's a lot of upside to this stock. Like I said, a lot of the major institutions, BlackRock is one of them too, who's taken a position. It's just one you're going to have to be patient with. But I do like this dip here on Roblox. Let me just check the RSI on this one. Was oversold. It hasn't been oversold in a while. You have to go back to 2023, and then you can see it had a nice little rebound. So definitely keep an eye on this one. Um, I I'm a fan. Unless it tanks, then I have to cut my losses. Any others? See what our future's doing. So here's the other thing we got to be on guard for tomorrow too. Government's reopening. Let's see if the big boost that we got is a buy the rumor, sell the news type of deal, because that's a possibility as well. Looks like Bitcoin. Bitcoin is one that I don't understand right now. That's got to flip too at some point. Roku, Mr. Roku. I feel like Mr. Roku's getting ready to rip too. I really do. Um, so I talked about this resistance range that exists here on Roku, and what I've been doing is drawing this box, and it's basically right through here. that it basically it keeps retesting or pushing into this area, but it can't close above it. And that if it could close above it, there is I believe a gap up here. Yep, a gap here at 143 that it will move to pretty quickly. So you could see that it will test it, but it just can't stay in here, right? We got in here in the winter of 23, couldn't hold it, fell out of that area. It pushed back in here February 25, fell out, dropped pretty hard. Now we finally got back in here, and this was a big move this day. Lots of volume came in, but we're still hanging strong in this box. My thought on this chart, and I've said this for some time, because basically what happens, it'll push into this drop and then build out trend lines. You could see that. Now this was a bigger drop and it formed a trend line. Uh, Pushed in, dropped, formed a little trend line. Push in, drop, formed a little trend line, which then broke down. Um, but it's so close to getting a close above that area. If we can close above that, I think you could see this one really push quickly into the 140s. Not in one or two candles, but I think over a week's time, this one could run pretty hard. So I do like this. Is at the top of my list for day trades this week. Now, I'll be honest with you, these last 2 days, I didn't trade yesterday. I watched charts today, but just didn't really see much. This one could be setting up for a good move. Um, you actually see the bear volume decrease a little bit today. Again, close over, I'm saying 108, then there should be some good opportunities to the upside here on Roku. I really do like this chart. Let me just check the weekly real fast. Yeah. And what would be really nice is if you do get a candle, inside candle like that on the weekly here, bullish candle closing inside of that one, that would just be a beautiful setup heading into next week. So I miss Mr. Roku. I do. I need to just go back to the old school traders podcast. I haven't done one of those in a while. Uh, I haven't put anything on YouTube in 2 days. The world doesn't feel right now. And the chart glasses, yeah. I got to bring them back. Got to bring them back. That's what I'm going to do tomorrow. That's it. I'm gonna bring them back. I got to find them. I got to find them. And all my recording equipment got trashed. That's a whole nother story. I have to tell you guys. All right. Well, that looks like it's going to do it. Any questions before we hop off here? I'm glad I'm upright and able to do this one tonight. So I'm glad to be here with you guys. But I appreciate you. I hope you join me for trading psychology tomorrow. And if there's anything that I could help you guys with, just reach out to me. Stay healthy. Don't catch the stomach bug. And I will see you guys back here next week. All right, guys. Take care, everyone. See you tomorrow, Rajon. See you guys. Have a great night.